Okay, so the point is we are now moving from what is called from life to livelihood issues. Last we had a very excellent session. That's what we got delayed. So in this session we have the session to be chaired by Professor V.K. Ramachandran, the Vice Chairperson of Kerala State Planning Board, and we have other panelists, which I think the chairperson will introduce. So with this, I welcome all of you on behalf of the chairperson of GIFT and our GIFT community to this webinar, and thank you very much for joining us. Over to Professor V.K. Ramachandran to moderate, to conduct this session. Thank you very much.
Thank you very much. May I begin by greeting the Finance Minister and the Director of GIFT, and commending this excellent effort and the which has seen a host of very active and interesting sessions. This session is on financing livelihoods in the context of the pandemic. Of course, this pandemic has had very special features. The previous disasters with which we've had to contend in recent years they were episodes when the economy suffered damage to its capacities, to economic activity, suffered over a specific time with measurable consequences in the short and medium term. In the case of this pandemic, economic activity came to an abrupt halt, and that halt was not locality specific or scale specific. There is also, we know, uncertainty about the period that it will take, period of time it's going to take to resume economic activity after this phase of the crisis is over and after the lockdown is raised. We've had one feature of, so what we're going to discuss today is livelihoods. Livelihoods have had a very it's a very broad sort of rubric. It from securing the basic necessities of life as defined by the Brundtland Commission to a much wider definition now, where the United Nations definition of livelihoods is the capabilities, assets, and activities required for living, which is a very broad definition. Immediately after the necessary and inevitable lockdown was declared, in Kerala, the government moved to protect livelihoods. We did so in the government of Kerala. It did so in different ways. The first was to ensure food to everybody, and this was a whole state effort, and a successful. It of course built on the institutions that have historically been our assets in Kerala, but providing food to everybody. The second was a direct benefit transfer of ranging from the pension amount to 1,000 rupees and more in some cases, to people under the poverty line, to pensioners, and to very wide sections of the working people, to households, and targeting all households below the poverty line. So food, basic necessities, and the cash transfer was the first step taken by the government. As part of that protection of livelihoods, the government of Kerala also ensured shelter, a safe shelter, not only to our own people, not only to the people who are regular residents of Kerala, but also those who have come here to help build our economy, the migrant workers. The third assurance was something you've been discussing, that was being discussed with part of the discussion, part of the audience in the last session, and that's also an activity required to sustain living, was to ensure everybody access to health services. So this immediately after the lockdown was instituted, the government moved very rapidly to through a series of direct transfers of benefits to people to protect livelihoods. The further livelihoods, of course, that is the first stage. But as the lockdown eases, and when it does, we shall have to look to means to address other forms of support to livelihood also. That is, support to different forms of wage employment, support to different types of self-employment, and support to different types of training for modern employment. Now, this whole gamut of issues, that is livelihoods, protecting livelihoods through direct transfers of in kind and cash, through access to health, and through reviving employment of different forms, is what I put to you for discussion. And I also ask you to look at the fact that we're talking about also how these are to be financed, not merely what they should be, but how they should be financed. I'm going to now, I shall not speak longer, and request a first, we have till what time? Till 3:30, right? So 10 to 15 minutes. You can take 10 to 15 minutes, 10 minutes. Is that all right? For participant to start with? Okay. May I request Dr. Pranav Sen, who's country director for the India program of the International Growth Center, but we know him as the former chief statistician of India and the former chairperson of the National Statistical Commission. Pranav, would you like to start?
Thank you, Vicky. Yes, let me start. Let me actually take up the latter part of your comments, which is what happens when the lockdown is lifted. The fact of the matter is, if we are thinking about livelihoods, what is really important is what is done during the lockdown itself. Because the danger is that if already the lockdown's has gone on for more than 40 days, and the danger is that by now a fair amount of productive capacity in particularly the small scale sector dead or very close to dying. If the lockdown continues a little longer, larger units will also have the same problem. In fact, most of the medium scale units in India do not have reserves more than 3 to 4 weeks. And we're already stretching the limits of that. So the really critical issue is that as we come out of this lockdown process, have we been able to protect our productive capacities? If we have not, then reviving livelihood is going to be extremely difficult. Rebuilding, re-establishing economic activities is time-consuming, and that's not going to happen, at the flick of a switch. So what is really the issue is, what have we done up to now and what are we going to continue to do? At the moment, very little has been done to help enterprises survive. In fact, the only measures that have been taken is actually just one measure, is what the Reserve Bank of India has done within the constraints of its authority. And what has been done, in effect, is that banks and financial institutions have been given the liberty to give a moratorium to loan servicing to their clients. But the problem here is that the decision as to who gets the moratorium and who does not depends upon the banks. This is problematic. And it is problematic because we know that banks were in any case very risk averse prior to the pandemic happening. Today, the banks would be even more risk averse. The net result, I fear, is a lot of enterprises who otherwise would be viable would be denied the moratorium. If that happens, the damage is going to be. Now, the problem, of course, is this cannot be handled by exhortations. This requires steps. RBI cannot take it. In fact, the only entity which can take it is the central government, and that is that the central government today needs to form the banks, the NBFCs, and the microfinance institutions, that the 3-month moratorium that the RBI has announced is not voluntary, it is mandatory. If you do not do that, then you are taking a call on who survives and who does not survive with very little basis on which to go. That's step one. The fact of the matter is, even with that step, what you will have is a situation that as we move out of the lockdown, as production activities are allowed to open up, you're going to have almost all these entities who will be in a situation where their working capital limits would have been used up, and they simply will not have the working capital to restart. So the second part of it, and that can come later, is that it again must be mandatory for banks and other financial institutions to provide additional working capital for all their existing clients. Which of these will survive or not survive will come later. You should expect a fair number of them not to survive, but that's a risk that we have to take. It's a cost that we have to bear, because we do not have the information base to do anything else. Now, this only the central government can. If you do this, what will end up happening is that the financial institutions as a collective will take a severe hit on their reserves and possibly on their capital base as well. And therefore, there must be a willingness, indeed, there must be an upfront commitment that recapitalization will be done. The amount of recapitalization and the process through which the recapitalization happens is something that we can discuss at length later. But unless this is done immediately, I am afraid we are going to see very high rates of mortality of our. And then actually ensuring livelihoods is going to be a problem. There's going to be a whole bunch of other problems as well, because business models are going to change, but that's something we can handle later. This is something that cannot wait for tomorrow to be done. So I'll stop at the moment and I'll come back later if
You're muted. Yeah.
Oh, I'm sorry. Am I still muted? Am I still muted?
No.
now you're okay.
Yeah. Sorry. I've started by saying thank you very much, Mukul, Pranab. And Dr. Ramkumar is NABARD Chair Professor at the Tata Institute of Social Sciences, but slightly more German. Today, he's also a member of the Kerala State Planning Board. Ramkumar?
Thanks, Chairman. I will not sort of get into issues that have been discussed at great detail yesterday and today, which can be summarized in one sentence, that we need to fiscally expand. That is, fiscal conservatism should be disbanded, and FRBM Act should, if possible, be thrown out, and governments should be allowed to spend, including through borrowing, and if necessary, monetizing those deficits. There is no doubt about that, and so I'm not going to repeat that point. Globally, the focus of most packages today that we see from the United States or the United Kingdom or the European Union, etc., these are not necessarily fiscal expansion packages or fiscal revival or stimulus packages of the sort that we have seen in the past. They are basically, most of these interventions are in the monetary domain as well. That is very important to understand, because when we speak about a 330 billion pound package in the United Kingdom, we have to understand that at least half of it is not expenditure from the budget necessarily. It's also a monetary expansion through increasing liquidity and providing more loans from banks and so on. They all these together into a single package. So I think one point which has not been adequately discussed is also what is necessary in the monetary domain. What I mean by monetary domain is to sort of premise it on the fact that a lot of small businesses, a lot of livelihoods of small producers, etc., are very dependent on the credit system and the banking system, and it is necessary to exercise the full potential of regulatory forbearance in order to protect the livelihoods of these sections as well. So our discussion should not be limited to the fiscal domain, even as we remain as strong anti-monetarists in the theoretical domain. If you look at all countries together, look at the most of the Western developed economies, their packages are largely to hold on. They are trying to hold on at the point that they were before Corona, till Corona blows away. These are not revival packages. They are not going to invest it in infrastructure. They are not going to invest it in classical Keynesian packages of the sort that we have seen in the past. They are basically trying to provide cash and liquidity to small companies in order to help them retain the workers in their payroll. So only if you keep your workers in the payroll will you get a benefit of, say, 80% of their wages being provided to you by cash, so that they could be retained and employment could be protected till COVID blows away, and you can come back and restart the way exactly at the point where you left it. That's the assumption of most Western packages. So I basically see when you reach a so-called post-COVID era, these holding on packages will have to necessarily expand into the classical form of revival packages, which will necessarily be a double of what they have already invested. So if they have invested 10% of the GDP on just holding on, I believe that about 20% of the GDP would be required to revive in the next 6 months or so on. So I see many of these revival packages, which are very large in the Western world, as only a beginning of a larger package that might unfold as we go by. A lot of this money is going into protecting small and marginal enterprises, number one. Number two, to ensure that employment is not lost. And number three, providing a number of tax relief measures to a whole sort of companies. So central banks have stepped in to soften SME finance constraints. A variety of financial facilities have been provided to the SMEs in most countries, like, for example, temporary tax relief, deferred payments, direct financial support, including fresh loans, loans at zero interest rate, loans at zero collateral, quick processing of loan applications, government guarantees to new loans, new insurance measures. These are all the multitude of measures that are being attempted in those parts of the world. A lot of penalties have been deferred. In many cases, the utility bill, the rent, power payment, payments for power, payments for water, all these are being waived or halved, or measures of that sort are being adopted. So a whole lot of policies are being adopted to protect small enterprises, small producers, and protect employment till the time the the COVID blows over. At the same time, it is again something that has been mentioned in this seminar yesterday and today. The Indian government response has been extremely disappointing. The union government, there was a discussion on this point in the morning. The union government, it is very important to understand, has taken what their advisor calls an incremental approach, or not a big bang approach. He thinks that we should not peak too early in our response. As a result, the government has not announced a second revival package, which was supposed to come after the so-called invisible task force meets at some point. However, what is more important here is to see a class dimension in this approach of the central government, which is, I believe, if you look at the responses of many of their advisors, influential think tanks like the Observer Research Foundation and so on, they see this as a time of reform. If you actually see Raghuram Rajan, he says, it is said India reforms only in crisis. And he says that this is the time to get into reforms that we have postponed for a long time. Observer Research Foundation has an official note which says COVID-19 is a perfect storm for deep reform. And you can see how the divisive agenda of the government, the ideological basis of this government and the economics in some form come together here. Economically, COVID-19 is a 1991 moment. Geopolitically, COVID-19 is a Balakot moment. Constitutionally, COVID-19 is an Article 370 moment. And together, these are all examples of India's some sort of spiritual renaissance. This is the, if you see commentaries of this sort, you see very clearly an effort to see this as a new opportunity for the further stepping back of the state from social sector, from different sectors of the economy where you need more government intervention, where it has receded from over the last 25 to 30 years. So you basically see an effort by the government, not just to step back, which is one point, but also transfer a lot of the burden onto the working poor in an effort to protect businesses and so on. So I see the lack of ability or the absence of a larger revival package in this ideological sense as well, that they see it as an opportunity for greater reform, like in 1991, and also they see this as a possibility where a large part of the burden could be passed on to the workers and the working class while businesses try to survive. Now, in my view, let me state my point in very brief terms. In my view, you basically at least need a 5 to 6 lakh crore revival package at this point of time from the government. When I say this, what I would immediately add is that because a lot of this spending is done by state governments, a lot of intervention and investment will have to go into the health sector as part of our efforts to rebuild livelihoods in the next few years. I assume that about 1 to 2 lakh crore will have to be invested in the public health sector in the next 1 or 2 years in order to build resilience in the sector and also to sort of build infrastructure and personnel in this sector. I believe that if you have a package of 5 to 6 lakh crore, about 3 to 3.5 lakh crore should be passed on to states in an untied format, so that states can decide what they have to do with this amount. It is very important to insist that made through the Finance Commission intervention or through some other intervention by the ministry, a large package of untied funds needs to be given to the state governments. I would sort of ballparkly put it at about 3.5 to 4 lakh crore out of, say, 6 lakh crore. Rest could be used by the central government, should be simply passed on to states to decide what to do to build resilience to the COVID-19 pandemic, and B, how to design and format revival packages which are customized according to the specificities of each state. The center's role is very clearly defined. There is Mahatma Gandhi Rural Employment Guarantee Program. There are central sector health programs where they should actually convert the sharing formula to something like 90-10 at least, if not 100-0. They have to intervene in areas central to agriculture, where again large a part of a livelihood protection should focus on. They have to focus on increasing in MSPs, expanding the public distribution system, and creating new price stabilization funds, etc. That's area where center has to come in at a major level. So I think the remaining money can be used by them. And all this reminds us that we need the Planning Commission back as well. There is no doubt about that. Niti Aayog has been perfectly incapable of doing this. The remaining part of my intervention, about 3 to 4 minutes, I will focus on something related to Kerala and what would be required from a Kerala perspective there. Just because we have done some work on it and it helps us to articulate the point better compared to a vague all India picture. If you look at a state like Kerala, the two important areas in which, for example, I am personally aware of is agriculture and a sector like tourism. The two major sectors where large number of workers are employed, both on a self-employed basis and as a casual, regular basis. If you look at agriculture, Kerala has already faced, because of its predominance of cash crops, predominance of export-oriented crops, and in a situation where exports have come to a complete halt, we are facing a loss estimate, or staring at a loss estimate of at least 3,500 crore rupees till April 30th. That's the kind of loss that we foresee in the agricultural sector. If you look at areas like rubber, for example, if you just estimate the kind of stocks that are lying in different parts of the state without being exported, the notional losses there come to at least 600 to 700 crore just for that one small sector. That's the kind of losses that we see. United States, for example, has this intervention where it protects the farmers, who anyway are a small category there, in the following sense. They calculate an average price decline that has taken place between January and April first week, and if the extent of loss is calculated on the basis of quantity and price loss, and 85% of that loss is simply passed on to farmers as a transfer. Now, this is an intervention that United States has tried here. We need not try it the same way, but we need to look at an MSP increase. We need to look at some cash transfers through the PM Kisan scheme. We need to ensure that loans of farmers are in some sense some relief is provided, if not waived completely. Some relief is provided to farmers. Fresh liquidity is provided, if possible, at 0% interest for the coming Kharif season. You need the Kisan credit card scheme and the interest subvention to be expanded to animal husbandry, fisheries, etc., which are currently outside the subsidized crop loan system. We need to expand the interventions through the Rural Infrastructure Development Fund. We need moratoriums, and much of these losses of these banks will have to be compensated by the government through a transfer to recapitalizing the banks. What I see here is the following. If you simply, just to give you a number here, the total, Chair, I'll just wrap up in a minute. The total interest income of banks in India in 1 year is about 8 lakh crore rupees. Out of that, the term loans would come to about 6 lakh. Interest income on term loans would be about 6 to 6.5 lakh crore. If you calculate on a monthly basis, what would it cost the government to simply waive, not moratorium, not postponement, waive all the interest payments on term loans? It will cost the government only about 60,000 crores a month. So what we could say is, if the government is completely waiving all interest on term loans for 3 months, March, April, and May, it would cost the government less than 2 lakh crore. And this would be an enormous relief to all term loan borrowers. So it doesn't cost much to intervene in areas like this. Similarly, if you look at a core area like tourism, where about 15 lakh people are employed in Kerala, we calculated, for instance, what would be required if a subsistence payment of 9,000 is provided for one worker for about a month. It would cost about 1,000 crore a month for providing a United States style wage support to protect employment in small and medium enterprises in the tourism sector. I'm sort of wrapping up my point this way. That is, you need to look at both interventions in the fiscal and monetary domains, and a lot of interventions in the monetary domains like waiver, interest rate relief, etc., will spill over into the fiscal domain, and all this will possibly come under the central domain. But a lot of it will also come into the state domain, where you have to protect specific small and marginal enterprises. That is where untied transfer of about 3 to 3.5 lakh crore from the center to the states becomes extremely important to be as part of the economic revival package of the center. Thank you.
Thank you. Thank you very much, Sankumar. Thank you. I'm going to ask Dr. V. Bhaskar, who was the Andhra Pradesh chairman of the Andhra Pradesh Electricity Regulatory Commission, but before that was Special Chief Secretary Finance of the Andhra Pradesh government. Welcome, Dr. Bhaskar.
Am I audible?
Yes, you are.
I would like to thank GIFT for inviting me to be part of this very interesting webinar on the impact of COVID. I would like to make my presentation in 4 parts. 3 drawing from the title, and the 4th a reference to the impact of Corona on fiscal federalism. This was discussed yesterday, where there were terms like cannibalistic federation and federalism and center drawing all powers to itself were discussed. So I mean, if there is time, I would like make a reference to that. The basic thrust of my intervention is that while this discussion is extremely relevant and pertinent to the crisis we presently face, we do not yet know enough for us to formulate an action plan. To this end, I will raise a series of questions, the answers for which may be necessary for us to proceed further. In regard to fiscal federalism, if I have time, I would like to raise the issue: is it possible that states are losing sight of the ball and ceding fiscal space to the center more by apathy than incapacity? First, let me talk of the context of COVID-19. Since COVID-19 is a crisis driven by the health sector, what action we take to alleviate stress in other sectors, including livelihoods, will both be dictated and influenced by the progress we achieve in tackling COVID. The primary response in the health sector, suppression and mitigation, is being implemented in all states under central guidance, some like Kerala more effectually than the others. But unfortunately, COVID seems to be simultaneously presenting us with some unknown unknowns which we have yet to assess. Are our testing samples biased? What is the percentage of asymptomatic carriers? Do people who have been earlier exposed acquire immunity? When will we see a peaking? Will there be a second wave in winter? Will we have to wait for 60% immunity, either through exposure or immunization, to finally conquer the virus? Till then, will India have to face a continuing cycle of lockdowns and liftings? The answer to these questions will affect how and in what manner the lockdown, presently till 3rd May, will be lifted. COVID has affected different states differently in their stance. In the manner of lifting, lockdowns will be equally differentiated. As was mentioned yesterday, we have smart lockdowns, suppression lockdowns, and grades in between. My basic submission is that until we know with some assurance when the lockdown will be lifted and in what manner, we cannot effectively consider a strategy for identifying which livelihoods to promote, when to do so, how to financially intervene this support. Until we know, I mean, I'm asking for, we need to see the future beyond 2 months to decide on how to support livelihoods. And until we know more, it will be difficult for us to take a decision, is my basic point. Let me come to the question of livelihoods. During yesterday's discussion, the need to support livelihoods in the agriculture sector, SMEs, was emphasized. Others spoke of employment intensity of the real estate sector. I agree with this emphasis, but more analysis may be required before we can come up with effective approaches to supporting livelihoods. The present lockdown prohibits movement of people across borders. In my state, Rabi harvest is ongoing and farmers are facing significant labor shortage. The forthcoming Kharif operations will commence. Will farmers be able to import migrant labor as before? Most migrant labor stuck in relief camps have low morale and are more interested in returning home than working. I know a case where the district magistrate offered 1,000 construction labor, migrant labor housed in his district, double the daily wage to work as harvesting labor. They refused. They said they wanted to go home. I sympathize with them. Should we instead support farmers to prompt procurement and immediate payment of their produce and hope that market mechanism will take care of the labor? MNREGS was mentioned. In the past, MNREGS schemes have competed with the requirements of farmers for agricultural labor. Should we relax MNREGS norms to allow for work on private lands, presently not allowed, including agriculture labor for harvesting preparatory work? The answers to these questions also depend on which state is the labor is coming from and when the lockdown is being lifted. If we want to nurture our economy through this crisis, we also need to keep alive firms who are faltering in the face of both demand and supply constriction. This was referred to earlier. Though the GOI has directed that states should ensure that no termination of employment should be done, this is hardly implementable. SMEs need support, but which SMEs? MHA on 24th relaxed guidelines to allow for only small shops. These are essentially traders. If the lockdown is imposed in a series of cycles, will it be appropriate to assist in the revival of the continuous process industry? Where will they get their labor from? They are required to follow the health protocols notified by the Ministry of Health and Family Welfare. These include having workers being physically distant from one another. Will compliance to these norms be feasible? Will it be financially viable? Will the workers be provided accommodation in factory premises? What is the procedure if a worker is diagnosed with COVID? Will the factory be shut for 28 days? Will the owners and the workers have to face isolation? The answers to these questions are critical to reviving industry, but the answers are not forthcoming despite the MHA in its guidelines of 23rd April claiming that these are only apprehensions. These are not facts. But they don't say what is the fact. And then how do we address the problem of constriction of demand even after industries are supported and supplies available? Over the next 3 months, there will be very little demand for white goods, electronics, textiles, luxuries. Entertainment and tourist sectors will be subdued. Real estate demand has plummeted. Government will have to take massive infrastructural projects to generate demand. So these are the issues relating to protecting livelihoods. Until we know how we treat COVID, we cannot answer the issue of livelihoods. And I come to issue of financing. The next question is, how should states undeniably are on the front line? They need support for these financing. States face a triple whammy as far as their finances. First is their own tax and non-tax revenue has come down. For inexplicable reasons, liquor has been put on the banned list. So one prime source of income for states has been removed, as a lot of people have complained. GST revenues are down. State governments' devolution to state governments is down. And they have the additional burden on COVID expenditure, which include free rations, cash grants, advance payments, which was mentioned by the chair. States seek to want more increased borrowing limits, GST compensation. They want GOI to absorb expenditure on migrants. But one thing, Mr. Chairman, is missing from this debate is, what about the state's expenditure plan? States are asking, my budget revenue has come down. I have expenditure. And therefore, I need to meet the expenditure. And as someone mentioned, there must be an open grant of money. But are not states responsible for a credible expenditure plan? Except Kerala, which announced a 20,000 crore relief package. No state seems to have made either a COVID expenditure plan or a credible expenditure plan for the next 12 months, meaning basically a revision of budget. This will be essentially a revised budget, which will become credible if it contains elements which show that states are truly willing to tighten the belt. These could include examples like removing the free power subsidy and providing direct benefit transfer to the poor, as envisaged by Government of India in its revised act. More important, removing vanity projects in state budgets. It's not only the center which has fancy projects like bullet trains and central vistas. States have fancy projects also, including coastal roads, additional capital cities, statues. Is it not time for states to relook at their expenditures when they look at financing? What about removing vanity schemes like financing lawyers on graduation, providing marriage expenses, providing pilgrimage expenses, construction monuments? And then more important, I was struck by the point made by the earlier speaker. I would argue that COVID-19 is a beautiful opportunity to do deep reform, and especially on the size of the government on the fisc. It is an opportunity to reduce the impact of very large government salaries and pensions. In the face of lockdown, government has significantly contracted its size, and it's working, at least for the duration of lockdown period. Why are states and government of India fighting shy of reducing government size? Allow for voluntary retirement of grade 3 and grade 4 personnel in government who are overpaid compared to the market on full pension. Considering the extraordinary nature of the emergency, perhaps also, and the fact that most state government employees are, to be very frank, not working, would they be willing to take a cut? Dr. Isaac was very carefully said that Kerala has not cut, but only deferred salaries. Why are we not taking this upfront and saying it is the size of the government expenditure budget is far beyond what governments can bear, and it is time that the size of government was reduced? It's a beautiful opportunity. Now, regarding financing, I would like to talk about Government of India has, I'm nearly completing, has allowed front loading of borrowings in a remarkable gesture. This was discussed yesterday. Government of India in March told state government that 50% of your debt allocation you can allow, we'll allow you to draw immediately. Now, if states were really short of money, and if states had a finance problem, what I would expect is 28 states would line up and draw the money immediately. The Reserve Bank of India allowed 3 tranches of borrowing on April 7th, April 13th, and April 24th for states to borrow. Some states borrowed 3 times, a lower amount. Kerala borrowed once, 5,930 on the first tranche. Maharashtra borrowed twice. But the question I wish to ask, Mr. Chairman, is why are states, Bihar, Chhattisgarh, Jharkhand, Meghalaya, West Bengal, these are all COVID-affected states. Why have they not borrowed? Are they not short of money? Is there not a need for COVID expenditure there? This is the issue, along with the expenditure plan of states, which I think states need to address before they can go to the governments of India saying, give me a COVID grant. I'll stop here.
Thank you. Thank you, Dr. Bhaskar. Is Gayatri Nair with us? Is she there?
Yes, sir.
Are you there? I can't see.
Can you hear me, sir?
Well, I can hear you. I can't see you.
Yeah.
Hello, the video is not coming. There is some connectivity issue.
That's it. Gayatri Nair, an Indian Economic Service Officer, is the economic advisor to this office. Gayatri, and she's joining us from Kochi. Yes, Gayatri.
Thank you, sir. Good afternoon to all.
Gayatri, 10 minutes? Yeah.
In between, because of the technical glitches, actually, I couldn't hear all the opinions expressed by the other expert members. But I would just like to make one point here is that the livelihood strategy or livelihood revival, we need to really focus on 3 things, is about sustaining livelihoods, restoring livelihoods, and reviving livelihoods. And the strategy for the lockdown period and the post-lockdown scenarios are 2 different scenarios. If we see about the lockdown scenario that we are currently undergoing, we know that the livelihoods can be sustained only by the direct cash transfers by government. which all economies are actually currently working on, and which all economies are currently doling out the cash transfers. And there are certain voluntary measures also. For example, if we sustain the income of domestic workers, if the units are paying the wages to their laborers in spite of being not working. So these are certain voluntary measures that are being taken during the lockdown period. But the only question about these measures are that these are not sustainable. Even the government can't continue the cash transfers continuously, and the voluntary measures also have can't continue for a long time. If we see the post-lockdown scenario, what I feel is that there are 5 scenarios that we can think of. First is where livelihoods, when the economies start working, livelihoods will be restored almost to its normal level. That is mostly for in case of formal employment, where all these the incomes will be restored at their original level. But the second scenario is where the livelihoods will be restored only at low levels of income. For example, if we take the auto rickshaw drivers, if they start working, they will not be earning the same income that they used to earn during the pre-COVID situation. So for them, the livelihoods will be restored at lower levels of income. A third scenario is where livelihoods will take a longer time, because the sector itself will take a long time to revive. For example, tourism, hotels and restaurants, which will take time to open up. So those engaged in those sectors, the livelihood will take time for revival. A fourth scenario is where there's a complete loss of livelihoods. The businesses which have gone bust, or the firms which find difficulty in reopening, they really need to think of new avenues of employment. And a fifth scenario, or a more positive scenario, is the new options for livelihood. For example, currently there are many firms which are now entering into producing masks, sanitizers, personal protection equipment, and there are opportunity for income through online classes. So we see new options of livelihood emerging in this crisis. So I believe that there are different scenarios that we are actually facing, and also different categories of workers that we need to focus on. For example, the first category would obviously be the most vulnerable people who are surviving on their daily incomes. Second is the livelihood of women. There are many families who depend on the women members for their income. Third is the migrant workers who have not actually gone back to their states. So what will happen to them? The sector that they are currently working in will also need time for revival. So how do we engage them? And last not the least is a immigrant population, the NRKs who will be returning to Kerala, who might have lost their jobs in their respective countries. So we need to actually think of livelihood for across several categories and also prioritize them. And coming to the discussion of financing those livelihood options, which is actually not going to be a very easy task. It's going to be a challenging task. But I have 5 suggestions to put forth before this panel. The first is, obviously we know we have budgetary constraints, but we also know that our annual plans are actually have embedded in them livelihood plans also. There are certain schemes which actually can play a significant role. For example, we have the Ayangali Urban Employment Scheme, which is a counterpart of the NREGA scheme. Then we have Kudumbashri as an organization, which is a role model for women's empowerment and livelihood. Then we have scheme under NORCA for return migrants. So if all these schemes are taken on priority, perhaps we can make a change in livelihoods in the coming days when the economy reopens. A second suggestion would be, we know yesterday also the discussions were taking place about how we can have increased central government support. So there are certain schemes specifically oriented towards livelihood. We know the Rural Employment Guarantee Scheme, and we know the National Livelihood Mission. So all these schemes need to be really pushed aggressively, and also the central government needs to increase the funding as well as increase their share of the funding so that the state will be supported adequately. The third option is about sectoral grants under 15th Finance Commission. There was entirely a session devoted to this discussion yesterday. And I remember Mr. Pinaki Chakravarti also making a point about that the immediate response measure that the 15th Finance Commission should actually come up with is a livelihood revival, and also about COVID recovery funds that they should think of. So I think we should need to explore about grants under 15th Finance Commission. All the states together should put forth this suggestion. Fourth is about tapping CSR funds, corporate social responsibility funds. We know when any financial crisis comes, we actually depend upon the CSR funds, but it's very important that we tap this fund, and already under the schedule, there is a provision for livelihood enhancement project. And the last suggestion would be, of course, it has been mentioned earlier about how financial institution needs to play a really active role in supporting industries and supporting revival measures. Only relief measures have been announced so far, but we need to go beyond that. We need to have policies for revival of industries, revival of agriculture operations, revival of trade and services. So banks also have to have a proactive role in this regard. So to sum up, sir, what I would suggest is the government, strong intervention by government, accommodative monetary policy, and a very key role of private sector is required to finance livelihood in these difficult times. And we should not only focus on direct revival, the indirect revival through economic revival also will actually help us in livelihood revival. So these are the points, sir, that I would like to lay before you. Thank you, sir.
Before I come to Dr. Sorry, am I audible? Yeah. Am I audible? Yeah. Before I come to Dr. Eapen, Dr. Mridul Eapen, Pranav, you had left a few minutes for later. You can take your three. Do you want to say a few, 2 or 3 things before we get on to the? You took much less than your appointed time. You can take about 3 minutes before the commentator, if you like.
Yeah, I deliberately did that because, the essential issue I think that we are facing now is that there are 2 things which need to be done, which is survival of people, human beings, and survival of productive capacity. Now, as far as the first is concerned, that is the principal function of state governments, and that's where state efforts really need to be focused. Insofar as the second is concerned, I think there it is really principally the function of the center, because for us to be able to approach production enterprises at an individual level is virtually impossible, which is why we need to use as our front end the financial sector, and mainly the financial sector, and to get from them what is needed to keep production enterprises alive. The problem, of course, is that there's been very little discussion with the financial sector at all. One hasn't heard of any discussion. I'm afraid we have left things perhaps for today. If such a discussion doesn't happen, then we are going to be in a situation where I'm afraid much of your SME sector would have vanished. I am less worried about the informal sector because we do have some experience from the demonetization episode, where informal economic arrangements tend to be much more flexible and adjust to circumstances. And I have no reason to believe that something similar won't happen this time. So to actually for the government to worry directly about the informal sector, other than in terms of making sure that lives are protected, I think the focus really should be on the SME sector. And there, particularly, I would suggest the microfinance and the NBFC sectors, which are both in dire trouble now. They are really the frontline soldiers in the economic revival. Second point that I'd like to, and this has been made before, we need to be very, very careful about when we go in for a proper fiscal stimulus. Till such time as we are convinced that the production side has come unstuck, come out of the lockdown sufficiently, an excessive fiscal stimulus would either be ineffective or in fact lead to precisely the kind of outcomes we don't want. It will lead to greater concentration of economic, and we should be very careful. So the real fiscal stimulus in terms of demand stimulus should come in a graduated manner and really should be backloaded till after we are pretty much confident that the productive sectors have started coming online. Till then, hold off, play a waiting game, make sure enterprises don't die. That should really be the mantra. Now, in all of this, I think the role of center and states are very clear. As I've been saying repeatedly, if we are going to use the financial sector the way it should be, it will have to be led by the central government. They are the only ones who do have the clout and the reach. But the discussion has to start now. The discussion has to be in collaboration with the states as well. But the directives will have to come from the center. How one actually manages to get that message across, I think, is the challenge that we are facing today.
Thank you. Thank you. Dr. Isaac, would you like to come in now or after the discussion? I'm going to ask you to come in. Yeah. Okay. Dr. Mridul Eapen. I know. I'm saying, do you want to come in now or after the discussion? After the discussion. Okay. Yeah, you're muted. Yeah.
After the discussion.
Okay. Dr. Mridul Eapen, former professor at the Center for Development Studies and a member of the State Planning Board and the architect of our annual gender budgeting exercise, is a discussion. Mridul. Mridul? Your mic is off.
Listen, please unmute.
Yeah, is it okay now? Can you hear me now?
Yes.
Can you hear me now? Yeah. You see, I mean, I don't have to understate the relevance and importance of this particular session. I mean, it's something we are really concerned about. I mean, figures have come out yesterday about the amount of losses that have been made in production, amount of losses that have been made in the wages, and therefore it's absolutely crucial that we start thinking. We've started thinking, and we should be thinking about how to really not hold on, as Ram Kumar was saying, because for us there are lots of people who would have just fallen down. I mean, there's no question of holding on the employment of. There's a lot of people who will have no employment in the post-lockdown period. So that, I mean, I'm glad you mentioned that it's an important thing for us to remember that there's nothing to hold on to. You have to have new types of employment. It was mentioned by Gayatri also in what she said. Now, one is this whole issue of livelihood, and I think that perhaps if we, livelihoods have to be thought out more at the state level. Financing, I think we have to think much more in terms of the center and what can the state do, because the state can do very little, at least in the lockdown period, very little, because so much of direct cash transfers. In the post-lockdown period also, a lot of finances are needed. Now, the financial sector, as Dr. Pranab Sen was saying, becomes very relevant, and I think that has to be brought in a much bigger way. But the livelihoods, what Dr. Bhaskar was saying, that until we know what is the process of unlocking the lockdown, what do we say about the livelihoods? Even the states have to start thinking about, they know their own state, they know their own economy, and therefore they have to start thinking on what are the losses to livelihoods that will occur given the state specificities and how they can be protected in the post-lockdown stage. So I think this is a very important thing we should keep in mind, that the states have to start planning for their state survival, for the survival of the livelihoods at the state level. And then we have to see how it is that we can, this fiscal flexibility that we were talking about it yesterday. I look upon health and livelihoods together, and what we discussed yesterday also, the need to get as much as we can from the center in terms not only of their borrowings, but state borrowings, and of course the lump sum amount that Ram Kumar you talked about. That's something which has been going on in my mind also. Is it the only way to get it? Is it through the Finance Commission, or can the central government actually have a large corpus of say 5 or 6 lakh crores, as you were mentioning, and that is then distributed as untied funds to the states with some devolution criterion, of course. So if that is possible, we don't need to go the Finance Commission way, because I'm worried that if we add on another terms of reference to the Finance Commission, well, they already have the defense. So will it be, okay, we look at both, and they look at the defense and they look at this thing, and then where are we? If the defense, carries away most of the funding. So I'm very wary of going to the Finance Commission with this stimulus package. I think it should be central government doing it in some other way. The other thing, and lots of interesting things have come up in the discussion. I think Isaac will take it up also. But what I had really wanted to say about livelihood was what VK you started with, that it has a broad, it's a much broader concept. But as Gayatri says in her paper, she's looking at it in terms of the earnings at the moment. And that is what I would like to emphasize, that, you see, all along the way, we had thought once upon a time that the livelihood approach is a better approach because income is too narrow to be able to understand poverty, and especially in the rural area, so we should have a livelihood approach. Fine. But what has happened is that it has led to so much of multi-activities that the burden on the women is absolutely tremendous to be able to make a living. If the livelihood is to make a living, or what is the means in which you can get the basic necessities of life, but they have to do 5 or 6 things to be able to do that. So I know when the money is a problem, that probably what I suggest is something which is not very practical. But I think at some point of time, we have to start thinking that households should have a regular, steady source of income. At least one source of income should be like that. We build up around that. That's a sort of a thing that is possible. Now, here also, in the given situation, we can start thinking of what Gayatri was mentioning, that, what we have in our plan schemes. For instance, there are composite schemes where men and women can get employment in industries, in agriculture, in tourism, in service sector. We have so many schemes where we know there is money kept for creating employment. Now, this is something where we can create quality employment, a more decent employment, a more regular employment for the men and women. I'm not leaving out the men, I'm saying men and women. But the point is that the women get really much more adversely affected, and they are also the ones who have to be in the forefront of fighting the pandemic, for provisioning the household, for looking after the household. So these women, we should not be burdening with too many activities as part of the livelihood thing. And livelihood approach for me should once again focus a little more on the earnings rather than the other things. This is just my own personal opinion, having worked with having looked at women's work recently. I feel that that's a big problem in the poorer households.
Thanks very much. Yeah. Thank you. I'm going to give, at the end, I'll give all the speakers 2 minutes each. But of course, before that, we're going to listen to the Finance Minister.
Yes. I'm sorry, I couldn't listen to most of your presentations because a large press was outside and I had to go and meet them.
Please come.
And I happened to hear one remark of my friend Bhaskar telling that I was very careful to say it was deferring the salary, no cut in the salary. The reason I went to meet the press is that the High Court verdict has come, some employees have challenged it, and High Court has stayed it, deferment. That there's a contractual, public, I don't know what explanation, but state cannot do away with it in executive order. That's only a deferment. Kerala doesn't want to cut, reduce the salaries, and so on. Very categorical. This deferring it to paying it a better time. There is a salary revision commission there. Let them take a call. The Kerala government is not going to interfere in that. Why? For the simple reason, the government should be a model employer. If government starts to do all this, then what will be the fate of millions of workers in the factories and so on, who anyway, outside the organized sector, have very little protection whatsoever. Therefore, that's the approach. Now, you have raised a very important question. Why are not the state's borrowing and spending. There are two reasons. There may be two reasons. One reason is that we have tried to outline with Ram Kumar a paper written, say, about 7-8 years back, why the title of the paper is "Why Do the States Not Spend?" It does a take on what the rhetoric of P. Chidambaram in the Parliament. And state don't spend because they have certain charges to meet of revenue deficit. Even if you have money with you, you don't spend. Yeah, 1.5 lakh crore rupees is tied up in Government of India securities. That is the explanation we gave. Because for some reason, I have never cared. I never care also. And that's the reason that we are doing well here now. We have invested in education, we have invested in healthcare, and therefore we have, say, in this crisis has come to a good state. Now, if you are going to spend on social infrastructure, social expenditure, your revenue will be always in deficit. And we shall not, we don't intend to change it, FRBM Act or otherwise. But for most it is decreed that you can spend. And therefore once you reach there, you hesitate to spend. But in this particular case, I don't think so, because there have been states have been drawing upon the Government of India securities they have invested. They have been drawing very steadily down. I don't know the exact situation now, but it will be very, very low. The present is all the states were testing the waters, except Kerala. We are committed to a 20,000 crores program, which we can finance only by front-loading our borrowing. Therefore, we went to the market with some 6,000 crores. Others went with 500,000 and so on. They got at 6%, 7%. The moment you take it to 6,000 crores, 8.9%. And Reserve Bank advises informally, the market is unsettled, don't come to the market immediately again. There's an extreme form of liquidity preference. The banks, financial institutions don't want to leave the money. Money is the king. Now, they are afraid of what may happen tomorrow. What is Franklin Templeton incident here? Here is a major hedge fund redeeming the redemption of their bonds because they think there may be some companies who may be downgraded, they may be in trouble, they're being cautious. Now, Government of India has to pump in 50,000 crores. The other thing a moment to do that. How much discussion was there to give 1.75 lakh crores to the tax concession to the corporates? Now, take the situation today. I am certain there are a lot of things to be answered. We have two committees, one by the planning board to look at what would be the impact of the economy. Another committee look on what would be the impact on the revenues and so on. Things are not clear. Now we don't know, for example, what are the implications of 500,000 migrant expatriates of Kerala returning to Kerala. Yeah? How do you plan? But there is a reality. What is that simple reality? Simple reality is 70-80% of India's daily earners, self-employed as well as wage laborers, they're locked up. They don't have income. Now, this is a simple fact on which there's no debate whatsoever. Now, all the policy makers who don't care need to have a hoot for giving 1.75 lakh to the corporates, or write off even this 68,000 crores of rupees defaulters just the other day. Now, when it comes to look at empathy for this vast mass of Indian poor, I cannot stand with that. Whether we will go broke 6 months from now, Kerala government intends to support them. So I will not go wrong rhetorically. All that I'm saying, you need to give immediate relief. That's simple. then I am not, Mridul, arguing for creating new livelihoods and so on. The existing livelihood, people anyway have been subsisting below the normal starvation level in some places, some petty shop, in some small scale industry, cottage industry, marginal 10 cents of land doing culture. They have been living, their livelihoods have been locked out. How do you exit from that? Now you see a shop owner, small shop owner, after 1 month you go back to the shop, what will be there left there to sell? Yeah? It will be all destroyed. A kharif crop which could not be harvested well is gone. So on. And now how do they sell it? Therefore, minimum that is required for a livelihood to begin is you have an extension of moratorium for a year or more, at least for a year. And as Ramkumar said, put them a leaf. Now the interest will be borne by the state. You don't give them money and so on. No helicopter money required. Minimum this, that you are not burdened with your debt. You will get a relief, moratorium, and a waiver of interest, at least a partial one. And perhaps to the banking system itself, an additional 20% for the working capital for the small farmers or the small entrepreneurs. This is what I'm saying. So I'm stopping. What I'm saying is, this is the first stage. Of course, then we'll have to think about how to unlock, how to go forward, etc. But this is a minimum required for opening up, exiting the lockdown.
Thank you. Thank you very much. Thank you. I'm going to ask each of the, because Dr. Joseph, you want me to finish in about 5-10 minutes, no? So we'll 2 minutes each in the same order, or shall we do it in reverse order? Gayatri, Dr. Bhaskar, Ramkumar and Pranam. Yeah, 2 minutes each, you'll be timed. Gayatri, your time starts now.
The basis of all this discussion is that there's a really trade-off between saving lives and saving livelihoods. I mean, we all our discussion, because the more the endeavor to save lives and putting the economy in lockdown is affecting the livelihoods of millions. So, and we are working in a very uncertain phase. The post-COVID economy, we are really unsure of. So all our effort really need to address those challenges if it has to produce any desired impact. So that's what I really want to say.
Next, Dr. Bhaskar.
Chair, I just like to add the point on government which Dr. Isaac mentioned. My point is basically you need to right-size government, not cut everybody in government. There are a lot of extra staff now with and this is a golden opportunity to do so. Apart from this opportunity to do so, there is another sector for deep reform which has not been talked of so far. Why are states not saying this is a good opportunity for me to levy agricultural income tax? States have consistently fought shy of it. Why can't states say, I will levy agricultural income tax on all persons who pay income tax and show agricultural income? You have a cutoff right there. If I pay income tax and I show agricultural income, you are liable to pay agriculture. This is an opportunity to try out these things. That is really not working out, because somehow this and the fact that large number of states are not able to, are not showing expenditure, is my suspicion is why the center is not coming out with its COVID package. They are looking at these borrowings and this fact that nobody seems to know where the expenditure, except I must say Kerala, which seems really knows what it's doing. Large number of states don't know. So center probably is thinking, I mean, what's going on here is an issue which is there. The second thing is, I would like to support Dr. Isaac. The ways and means limit was increased by 60% by the RBI. The increase of ways and means limit of 60% is a paltry 19,000 crores. Compare it to the 50,000 crore limit opened up for the mutual funds in a day yesterday. So the center is certainly not opening up as much as it could. And I just like to point out regarding fiscal federalism, is my concern that states are not keeping an eye on the ball. I'll just give two examples. First is March 30th. The Finance Bill 2020 was amended with a single line buried in the text saying the figure 8 is increased to 18 in Annexure 1 of Finance Bill 2018, our bill. Basically, it meant is that the cess on infrastructure was increased by 10 rupees per litre. The center took advantage of the price fall in oil to walk into the fiscal space. This amendment was not challenged. It was passed unanimous. I agree that it was time of COVID. It was passed without a whimper. The states allowed the center to occupy the fiscal space. And the other thing is the operational space regarding COVID. I don't have time, but I would love to go through the Epidemic Diseases Act and the Disaster Management Act. The major power to work in COVID is only with states. But center has assumed that power because of the Supreme Court order. They obtained the Supreme Court order saying states better listen to a center, and they derive their power from that. Here again, the states have lost sight of the ball. And
Thank you, Dr. Bhaskar. Thank you very much. Thank you. Thank you. I'm going to go to Ramkumar now. Dr. Ramkumar.
Yes, I think I'll start just 3 or 4 points in these 2 minutes. The first is Mr. Bhaskar's comment reminded me of an episode of Yes Minister that I saw some years back, which was called The Compassionate Society, which is the story of a minister who sees an opportunity to further his career when a newly built and fully staffed hospital seemed to have no patients. That represented a classic Tory strategy to cut the NHS to size. This has been a feature of our attitude to the public sector, and I think that's part of the problem here. When we speak of deep reform, what is meant is right-sizing the state, and right-sizing the state includes a kind of apathy to the formalization of workforce and the importance of public sector in providing certain core services. Our number of government servants per lakh residents is actually 1/6 or 1/8 of what United States or other countries of those countries have. We need a larger public sector, public services, which can provide basic services to people. So I do not think that deep reform means right-sizing the government in terms of personnel, manpower, human power. Sorry, Mother. So that is point number 1. Second is when I mentioned about hold on, what I meant was something that Professor Pranapsen also referred to in his intervention, which is that you do not have scope for a large demand revival package at this point of time of the classical Keynesian sense. That is because you have a lockdown, and only after lockdown is over, and when supply chains pick up, can you think of such a package. However, at the same time, even when I say hold on, what I mean to say is also that there are areas where increasing demand and relief converge in their meanings or in their objectives. Providing a small transfer to people to purchase food is at the same time a demand revival as well as a relief measure which allows them to hold on. It is in that sense that I meant it. If you look at the food prices coming down in terms of food price indices, they actually represent a sharp fall in demand for food and food consumption. And that is shown by many data sources. So in that sense, we need a demand revival package where relief coincides with demand. One last point.
You got 5 seconds.
Which is that Dr. Isaac, the central government's measure to cut its DAs also is in some sense a renegation of the reneging from the contract, if you interpret it the same way. The DA cut is equivalent to salary for 52 days in a year, which has been cut by the central government. So I would like to say that all those measures will be now under question, given the High Court verdict that you have cited, which I have not quite seen, but I'm just going by what you said. Thank you.
Thank you, Ramkumar. Dr. Pranab Sen.
You know, there's one action of the central government that does not seem to have been discussed at any length, and I'm a little surprised, which is that the government actually has ordered all departments except 10 selected departments to cut their expenditures between 5 to 10 percentage points. And what is going to happen, and this is inevitable, that entire cut is going to come on the central sponsored schemes. So there's going to be yet another hit to the state budgets that is perhaps not being factored in, but take it from me, it's coming. So now the real issue is, states are still wary of going to the market. The borrowing limits have not been increased. All that has happened is allowing front loading of the borrowings. Now, when this happens, the states are going to be faced with a very difficult choice, which is cut back on their CSS in a situation where the CSS is one of the more important interventions that states do, or to top it up with their own funds, which frankly they don't have at the moment. It's a difficult choice, but that's a choice that they're going to have to make very, very soon.
Thank you very much. Dr. Isaac, you want anything? Dr. Isaac, do you want to say anything? No. Yeah. We have to wind up now because it's 12. It's 3:35. I just want to say before we end, by the way, we do have an expenditure plan. We do have an expenditure. It's called the plan, and it's being reprioritized. The idea that this is not being talked about is wrong. We have our priorities. I mean, I won't comment on other states, but Kerala does have a plan. Kerala has its priorities, and so you should rest assured, Dr. Bhaskar. And if we receive money, which I mean, we're receiving all too little money, but the more we receive, the more we'll do with it. The more we'll do with it. We have no doubt that we are. I hate to put it so boldly, but if we get money, we'll use it for the people, and that happens in Kerala. We are most ready to receive it, and we know exactly what we want to do with it as well. Anyway, thank you all very much. It's been a very stimulating discussion. Thank you, Pranab. Thank you, Dr. Bhaskar. Thank you, Ramkumar. Thank you, Gayatri. Thank you, Dr. Mridul, Finance Minister Isaac, and I can see Dr. Narayana, Dr. Jose, and Dr. Joseph there. Thank you all, and we move to the next session.